spending that is spent by having the Internal Revenue Service write the check is not a tax cut. The Social Security, what's called a Social Security cut, is not a cut in taxes. What it is a handout measured by 2% of what most people's income is, reducing the amount of Social Security that's taken out of their pay. Now, it's not going to make the Social Security system worse only for this reason. Congress has decreed that this is not going to, the same amount is going to go into the Social Security pot. But this is a separate amount of money. It's being borrowed as part of the regular borrowing. It's part of the regular cost of this bill. They need to borrow that extra money and put it into the Social Security system. So this really is not a Social Security cut at all. It is a handout that is being calculated by an amount equal to 2% of what your salary is. It's as if they're just giving you an extra check with every paycheck equal to 2% of what would otherwise have been taken out. So again, this is not really a tax cut. It is a government handout for those people to stimulate spending. That's specifically what it was. And like I said, it doesn't make the Social Security system worse because it's not coming out of the Social Security trust fund. It is coming out of the regular revenue and just being put back into the trust fund. But it's still money. It's still money that's not there, that's being borrowed to hand out to create stimulus. It was just like there's a child credit that's still in there. The child credit is also a big joke. That's another way to figure out, everybody who's got a child gets $1,000. Well, instead of writing a check for $1,000, which is what they do in the UK and in France or whatever, we want to call it a tax cut. So what we're going to do is, instead of having the government write the checks to everybody who's got a kid, we're going to tell everybody who's got a kid to put it on their tax form, and you get the $1,000 from the IRS. Now we can call it a tax cut. So it's kind of it shows the kind of distortions that are in the budget. And by the way, if a company tried to do that, the SEC would close them down. But the federal government tends to get away with it. So the tax cut got in, okay, thankfully. But within 2 years, we're going to have to deal with it, because one of the problems is that even the current year's budget, as deficit ridden as it is being considered is being considered as good as it is only because it is assuming that after the second year, budgets are made for 10 years, from year 3 to year 10, it's assuming that these same Bush tax cuts that we've got for the next 2 years are being reversed, and all that extra tax money is going to be collected. If we assume for a moment that we're going to extend those tax cuts for another 8 years, the deficit would be trillions of dollars greater. And since everybody sitting here and most people in the country have no expectation whatsoever that those rates are going to go back, whatever they tell you the deficit is going to be for the next 10 years is understated by trillions of dollars. Now, this brings us to the policy procedures, the things that are going to affect us in a very negative way in the coming years. The president had a deficit commission that was put together. He put it together because he kind of knew that something needs to be done, but he didn't want to be the messenger to get shot. We already know that the president does not have any leadership potential whatsoever. He wanted somebody else to make the hard choices, and maybe he might go along with it. By the way, even with this tax cut, which on the one hand, he wanted to take credit for extending the tax cuts, but on the other hand, he had to tell people that it was a terrible thing and that the businessmen who were getting this money shouldn't have gotten the tax cuts. They should have ended up paying more. But that would have just terribly affected the economy. And so, I mean, he's lucky that he was dragged along to go along with the tax proposal. It'll be a whole lot better for the economy that he did. But what about this deficit reduction? What is going to happen? Something very interesting happened in that deficit reduction report. The first wonderful thing that happened, because even though it wasn't passed, they got 11 votes out of the 18 members of the commission. They needed 14 out of the 18 to require Congress to take an up or down vote on the entire policy. It would have been devastating if they did that, but they only got 11. So even though it's not going to go to a vote in its entirety, an incredible amount of good good opinions came out of the deficit reduction report. When I say good opinions, I mean lots of people from both sides of the aisle said, you know what, we don't love everything, but we realize that these things may be the best of the evils. So maybe we need to do this to keep the country solvent and to stop from becoming Greece and Ireland. And the wonderful part of it is that a couple of things were very good about it. Number one, there's no VAT, no national sales tax. Now I know there's a lot of people who are for this fair tax, and I've looked at it, and it's a very good thing. The fair tax is a national sales tax that would be a substitute for the income tax. We'd get rid of the IRS, we'd have this fair tax. I want to say to people that although I think in a vacuum it would be a very good thing to have instead of the Internal Revenue Code and the income tax, as a tax guy who's been in this business for 35 years, there's no way to get there from here. Because if you have, even for 1 second, that tax, a national sales tax, along with an income tax, we're going to end up like Europe. We're not going to get rid of the income tax. We're going to need it for some spending or other. We're going to have both, and it'll be devastating to the country. So although I'm not against the fair tax, I like it in theory, I just don't see how we can ever get there. So, and if the Deficit Commission would have proposed it, it would not have been instead of, it would have been in addition to. They would have said, we're going to cut the income tax rates, and we're going to have a low VAT tax, and everything will be hunky-dory. Baloney. We know what happens when you do that. It stays that way for a minute, and then it goes back up. If you remember the 86 tax cuts with President Reagan, got the tax rates down to 28%. And you said, we get rid of all the deductions, and we reduce the rates, we got a 28% rate, we got rid of a lot of deductions, revenue neutral, now we got a great tax code with a maximum rate of 28%. 3 years later, President Bush, the first, no new taxes, raised it from 28 to 31. Comes in Clinton, goes from 31 to 35. 2 years later, 35 to 39.6. There's a 40% increase in rates from 28 to almost 40% after we had promised to take lower rates in exchange for giving up something. It's the same thing would happen here. So no VAT tax in the Deficit Commission report. Nobody wanted it. Wonderful. Now, though, how are we going to budget? How are we going to get our country in control? How are we going to get it under control? Well, the first thing was, well, wait, maybe we got some combination of raising taxes and cutting spending. The good news about the deficit report is the focus was really on cutting spending. The bad news about the report is there were some tax increases in it. So you had actually a remarkable situation. There were 6 very important free market people who think like we do, on that commission report. There were 3 senators and 3 House members. The senators, including Senator Coburn, the House members, including Congressman Ryan. These are people who I think are so important to our cause. But what you had was Ryan and the other 2 congressmen voting against and Coburn and the other two senators voting for. You have people like Dick Morris coming out, Coburn's a traitor. I've been following Senator Coburn for years. He is no traitor. He is a doctor. He is a free market guy. He is smart. He's as good a thing as to happen to this country as anything else I can think of. But where we are was this. The proposal had a vast majority of the budget balancing measures were spending cuts. There were some tax increases, and there was some means testing. And Coburn said, I don't like the spending increases. I would have been in favor of having all spending cuts, but we got to do something or we're going to end up like Greece and Ireland. Ryan said basically exactly the same thing, but he said, I can't vote for it because of the tax increases. The truth of the matter is, all 6 of them were all in the same place, but it was a tough call as thinking, I mean, you're not going to get perfect. We're not going to live in a perfect world. If we don't do something major to save the deficit, we're going to have either huge inflation or bankruptcy or other devastating things are going to happen. So I respect both sides. I respect the yes votes, I respect the no votes, and what needs to happen is the thought process that went into both of those votes has to go forward. And I'm sure Tom Coburn is going to be fighting to fight the deficit reduction with no tax increases, but if you have to give a little bit, I mean, you have to be a little pragmatic. I am as staunch a libertarian and a no tax increase guy as anybody. But something needs to be done. If there's anything more than a small amount of tax increases, I would be for it, and we need to fight the day. But we need to make sure something happens. So what were the changes that are going to affect our lives? The first thing is spending cuts in the discretionary part of the budget. There's really 3 parts. I mean, people say, oh, it's too confusing, I don't understand all of this stuff. It's not. It's really simple. There are 3 parts to the calamity that we are now living through. The first part is discretionary spending. It's gone totally out of control. We've got more bureaucracies. The Europeans have what they affectionately call quangos. They're warning us against quangos, but we're doing them here. What are they? It stands for quasi-autonomous non-governmental organizations. In Europe, they've realized that the parliament passes something and they set up a bureaucracy to implement it. And 5 years later, the bureaucracy is running its own thing, setting its own budget, hiring its own people, demanding money out of the budget. The budget's getting out of control, and nobody has control of it anymore. Well, guess what? We've got them here. What they're called the Internal Revenue Service, they're called the Environmental Protection Agency, they're called OSHA. All these organizations, they're making laws of what kind of light bulbs you can get and what the shape of your toilet seat has to be. What kind of nonsense is that? And this is not, and Congress says, well, we didn't say you have to do that. Well, Congress, you set up those organizations, you got to take them down. I mean, carbon dioxide is a toxin. Boy, it's amazing. I should be killing myself. I mean, it is nuts. Okay, we got to get these, what in Europe they call quangos. I'd love to have that. I just think the term is so apt. It's so descriptive of the idiocy of those institutions. So.